We did have a last-minute scheduling conflict. Representative Ann Lincheski was not able to be here. She sends her regrets, and we are very fortunate that she also sent us Representative Jim Dabney to be a panelist with us today. So we thank him very much for that late-minute change. So Representative Jim Dabney serves as the chair of Property and Local Tax Division in the House. He also chairs the House Ethics Committee and is a member of Education Finance, Education Policy Taxes, and Ways and Means. Representative Dabney lives in Minneapolis, is married with 2 children. He holds a BS in Psychology and Social Work, an Master's in Education and an MPA from the University of Minnesota. He was elected in 2000, and this is his 7th term. So please join me in a very warm TwinWest welcome for Representative Jim Dabney. We are also very excited to have with us our own Senator Ann Rest. Senator Ann Rest serves as the Vice Chair of the Senate Taxes Committee and the Chair of the Tax Reform Division of the Tax Committee. She is also a member of State Departments and Veterans Division of Finance, the Transportation and Public Safety Division of Finance, and the Transportation and Public Safety Committee. Senator Rest lives in New Hope. She holds a BA from Northwestern University, an MA from the University of Chicago, an MAT and MPA from Harvard University, and an MBT from the University of Minnesota. That's quite an impressive resume. Senator Rest was first elected to the Minnesota House of Representatives in 1984 and served 8 terms. In 1999, she ran for the Minnesota Senate. She began serving in the Senate in 2000 and has been re-elected to 4 subsequent terms. In addition, Senator Ann Rest is also a TwinWest Chamber of Commerce member and was endorsed by the TwinWest Political Action Committee this year. So thank you very much, Senator Rest. Come join us. Okay, so we're going to jump right in. We've got lots of questions. I'll let you get settled here. And then also, just to let you know, at your desk, you have a document with the TwinWest logo on it that gives you some highlights of what was in the governor's proposal. So take a look at that. You'll be hearing us talk about a number of those things as we go forward. So let's talk about the governor's proposal. So it included some pretty significant changes in the Minnesota's tax system. His proposal, just to highlight some of them, lowers the overall sales tax while expanding its base to new services, including services and higher-end clothing. His proposal also includes property tax relief and adds a 4th tier income tax while lowering the overall corporate tax. So there appears to be a little bit something in his proposal for everybody to love and for everybody to hate. So it's balanced that way. So we will get into quite a few specifics, but let's start by just kind of your overall impression of what you saw come out in the governor's proposal. And obviously, the governor proposes and the legislature makes the laws. So just overall, maybe we'll start with you, Senator Rest, and what was kind of your reaction to when you saw that?
Well, first of all, thank you very much for that introduction. And one of my proudest associations over the years has certainly been with the TwinWest Chamber. I really applaud all of the outreach that you do in the community to new businesses, and I was sitting today with some guests, and I hope that you will respond favorably to their invitation and become a member along with the rest of us. The governor's overall budget, I was really happy to see that for the first time since I've been in the Senate, we had a governor who said, enough. Enough is enough. We're going to deal with this structural deficit once and for all. Or maybe not for all, but at least right now. And I thought that took a great deal of political courage, because in order to achieve it, he was going to have to propose some things that initially and maybe in the long run are not going to be very popular with any number of people. But even in the midst of dealing with the structural deficit. And, you know, he held himself responsible for not doing it before as well. I mean, we had Republican governor and a DFL governor who didn't deal with it. We had a Republican legislature and a DFL legislature who didn't deal with it. And now this governor has said, we are going to deal with it. On the other side of that, in terms relative to the tax proposals that he's coming up with, which is what I'm going to be dealing with mostly, Senator Skoye and I. By the way, I hope you get a chance to meet Senator Rod Skoye. He's from up north. He is a wonderful partner in moving forward on tax reform. We're in the same office suite. We meet and talk every day, and it's really, and he listens. He's such a good listener. So I hope that you'll have the opportunity at some point to meet with him. But the other side of it is what the governor's values were with regard to investments. And the investments that the governor wants to do are in education. And that, and it's not just one side of it. It's not just the pre-K, which people have been giving lip service to and no resources for years. It's also on the other end in higher ed, which makes Senator Bonhoff salivate because that's her committee. But I thought that was a wise and bold choice, given all the cuts over the years. I mean, he started out his term with, in the first year, cutting almost $2 billion in spending. Probably, well, I would admit, forced into that mostly by Republican legislature. But huge cuts were made, but we still didn't end up dealing with the structural deficit. Now we're going to deal with that. So that is what I believe makes it an exciting term for the legislature. As we get this blueprint from the governor, when we have it as a starting point, he insists it's a starting point, not an end point. I feel a little bit like I'm an HGTV addict, and I don't know whether it's Love It or List It that I'm dealing with here, or the Property Brothers, but I kind of get this thing of, here's this grand plan, and now the legislature's going to come in and say, I can get you those same results, but they're not going to cost as much. And I think that's our challenge, and I am so excited to be a part of that. I love my job, and I'm just enthralled with it every day. Thank you.
Representative Dabney, welcome to TwinWest. So just your initial reactions.
Thank you very much. And first, let me thank you as well for the invitation to be Chairman Chesky's stunt double here this morning. I have always had a priority over the last dozen years that I've been in office to reach out to the business community in my district. That's largely little neighborhood business associations. I meet with them once or twice a year, as well as then connecting with the downtown business community, both the Minneapolis Chamber, BOMA, the Building Owners and Managers Association, and the Downtown Council. Because as a Minneapolis legislator, I need to have my ear to the ground, both on the neighborhood level and then on the larger level of the state's largest city. The beginning of the legislative session was interesting. A little different, I think, from past years, where we're always, the first year of the biennium, we're doing a lot of laying the groundwork, because in the House, of course, you've always got some influx of new members who you just need to help bring up to speed. And this year, we've got 41 new members out of 134 member body. So it's a significant percentage of new members. And as I was sharing at the breakfast table with some of the businessmen there, we don't get to choose our team. You do. In business, you can go out and you can decide, I want to hire that woman or that man, and I'm looking for these qualities, this experience, this credential. We work with whoever you send. So you're always trying to figure out how to put together the team once the players have already been picked for you. But we were also waiting for the governor's budget. We knew the governor, being who he is, was going to come in with big ideas, but that he wasn't going to consult us in the process for the most part. I'd met with Commissioner Franz a time or two during the run-up to the election and to the session, and he gave little bits and pieces of what might be in there, but certainly nothing that would have indicated it was going to be quite as significant as it turned out to be in terms of its complexity, in terms of its boldness, in terms of its vision. I want to agree with Senator Rest, though, that the most important piece is dealing with the structural deficit and getting that piece behind us. I think as the legislature, I want to take it a step further. I think our job is to do what didn't happen 2 years ago. Our job is to listen to Minnesota. Our job is to solve this budget in public, not behind locked doors in a cold and darkened state capitol. Our job is to understand what the implications are of what we're doing as we propose and as we implement. The budget settlement in 2011 kept showing up in 2012 with bills to fix what they'd done in 2011 because they didn't understand what the implications were of what they'd done because they did it in the dark. The speaker stopped into my office, and then I'll hand it back to the moderator. Speaker stopped into my office yesterday and said, "What was that bill you introduced with Representative Davids today?" Because it's about that thick, and it had a long list of changes to tax policy. And I said, "Oh, that's the technical fix bill to all the problems resulting from the elimination of the market value homestead credit." Because they eliminated the credit, but the credit was tied to a whole number of different other policies that they never looked at. And so we have to start by simply doing our job in a professional and thorough manner. And I hope that, and I expect that this year you will see a much more public, honest, and open process on taxes and all other policies than we saw 2 years ago.
Okay, so let's jump right in on some of the specifics, and I'm going to start with one that is at the top of the list for heartburn for the business community. There's a couple, but this one really is up there. Obviously, the business community is very concerned about the new tax on business-to-business transactions that is being proposed. And unlike some of the proposals that are still controversial, tax on clothing, it's controversial, but it's not uncommon if you look across the nation. Business-to-business tax transactions, there's only a handful of states that have that. So it really does create this competitive disadvantage, especially when you look at advertising, law firms, things that you can easily purchase that somewhere else remotely. You don't have to purchase that in the state. So that's a significant concern. Local governments, Representative Anderson referenced this, but Plymouth has looked at the additional tax liability of this provision is $700,000 to the local communities. That's a pretty hefty, especially for the western suburbs that don't have LGA and things. So talk a little bit about that provision, where you and/or your caucus seem to be on that, and where you think that will go. So, Representative Dabney, you want to start with that?
Sure. Thank you. This is probably the most challenging part of, perhaps the most challenging part, you'll get back to me on that, of the governor's tax proposal. From a kind of a purist academic tax policy provision or position, you don't want to tax business-to-business transactions. You want to wait until the consumer is doing the final transaction at the end. I do, however, hear the governor's voice of we also don't want to make the tax system any more complicated than it already is. And there are places where it's unclear from a distance, is that a private transaction by a consumer, at which point you can make an argument if we expand the tax base to services, that should be included, or is that transaction by a business, at which point you can make an argument we shouldn't be taxing B2B experiences, and therefore it shouldn't be. The example I think Commissioner Franz has used is a small business person who has a will done. If we extend the sales tax to legal services, I won't ask how many lawyers there are in the room, but if we extend it to legal services, and that small business person has a will done, Are they doing that as part of their business approach, and they need to deal with, on their passing, what happens to the businesses and the assets? Or are they doing that as an individual, and when they pass, they have to deal with the business and their other assets? The commissioner's argument is, from a distance, the Department of Revenue can't tell whether that's a business transaction or a personal transaction. And so their argument is, we're just going to tax all of it. I would imagine that we are going to struggle mightily with this question of business-to-business sales tax, and will come down lighter on the business end than the consumer end. But that's a bit of speculation as we start to get the technical language that we don't have yet from the governor's office and really see, okay, how is this written? What is this going to impact? How is it going to impact?
Well, I have a number of reactions to the business-to-business proposal in terms of sales tax imposition. One of them is, I already tried it in a proposal that I did in 2009 that was based on, and I know some of you are very familiar with this, the proposal called Minnesota's Millennium, launching a new generation of competitive leadership and economic growth. And it was a report coming from Governor Pawlenty's 21st Century Tax Reform Commission. And in it, one of the strongest recommendations was to stabilize the sales tax system, and to do that by broadening the base and lowering the rate. Right now, the sales tax is along with the corporate tax, is a very volatile part of the sales tax system. I had that in a proposal that brought eventually a lot of tax relief. But in talking with a lot of lawyers and accountants, and I'm a retared CPA, it was very difficult, as Jim just pointed out, to pinpoint the point of sale and just what kind of a transaction it was, simply because a business was purchasing it. And I had it as a revenue neutral proposal where the rate could be significantly lowered. With regard to how far the governor gets into the details and his folks about how they would actually go about administering it, I think that there's going to be many more questions than perhaps we can get the best answers to. But that being said, I think we have to also re-examine all of the tax expenditures in the so-called tax expenditures, which are exemptions, deductions, anything that makes one taxpayer different from another in terms of their access to the tax system. Senator Reinert has introduced a bill to create within, I hope it will be within the Department of Revenue, a tax expenditure commission or task force that examines the tax expenditures on a regular schedule and rejustifies why that tax expenditure is in our group of tax benefits, and that also includes credits, like we're interested, Senator Anderson, I think, was talking about the R&D credit. We're also going to pursue in the Senate the angel investment credit. But with regard to the sales tax, we have kind of a uncomfortable policy with regard to whether where the sales tax should be imposed. And whether it is at just the final transaction, or whether it is purchases made by an individual consumer. And we have things in our budget where sometimes it's one way and sometimes it's the other way. When it's the final product where it's imposed, you get into what one of the biggest complaints about the business-to-business services is the notion of cascading and of pyramiding, that the costs that, or the product or whatever that has a tax embedded in it is indeed finally passed on to the consumer, who in many instances will be paying a sales tax on that as well. Do we do it already? Absolutely. Just think about the corporate system. We do that already. We tax profits and we tax dividends, same income. But should we do it self-consciously as we move forward with new policy? And I think that's one of the biggest challenges. So the governor, has said that he's proposing expanding a lot of the sales tax base in which individual consumers participate, and he says, why should businesses be held harmless in that regard? But businesses already do pay sales tax on a number of things that individuals do, even services. I was talking at the table about cleaning services. Whether you're a business or an individual, you pay a tax. You pay the sales tax on that. So in that instance, is the business, in the stead of an individual? And why was that okay, but now the other kinds of business-to-business taxes is not okay? And I think part of that, the answer to that is that the business-to-business taxes that are proposed here, a lot of them are professional services. They're not the lawn care. They're not cleaning services. They are the guts of the operation of that business, and that's where I think we have to be the most cautious about moving toward the business-to-business tax. But one more thing. Mm-hmm. But what we need to do overall is modernize our tax system, particularly in the sales tax area. We have a sales tax system that operated just fine in 1950, but our economy has changed. We don't have the same basket of goods as consumers that we had in 1950. In the 1950s, 2/3 of the purchases made by individual consumers were of hard goods, only 1/3 of services. Today, it's flip-flopped. And my example for that, although it is actually something that is taxed, is the basket of goods that my mother had included an iron. And she ironed my father's shirts. The basket of goods that I have 2 irons. I have an iron upstairs and an iron downstairs. I can iron anywhere in my house. I don't very often, but it's still in my basket of goods.
You can aspire.
When I go over to my daughter's house and I ask my 10-year-old grandson, where's the iron? He says, what's an iron? It's no longer in the basket of goods. All of my son-in-law's shirts go to the laundry. My daughter would never iron, and certainly not my son-in-law. So it really is a serious comparison in terms of where we have come. And our sales tax system doesn't recognize yet that new basket of goods. And so when we're looking at the services that are purchased by consumers, the individual consumer, a person, a real person, not a corporate person, a real person, we need to be mindful of that and welcome the opportunity as we're moving forward with this budget to deal with it. My favorite thing to do would be to, whatever we do within the sales tax system, to make it revenue neutral, to really modernize the system without looking to it for the largest source of additional revenues in the governor's budget. But again, number one, we must solve the structural deficit. We do not want to go into the next biennium with another $1 billion deficit. We will not do it with gimmicks and shifts and whatever. We're going to do it with our eyes open. One tax person in a big corporation said we need an adult conversation finally about our budgeting principles.
Thank you. Boy, do I identify with that ironing thing. And my mom is horrified by it, by the way. So let's talk about property tax. So one of the things that is in the governor's bill is a $500 relief on property tax for, correct me if I'm wrong, but I believe that's regardless of income, that's just across the board. So talk a little bit about that, your perspective on that being proposed, and how do we ensure that the suburban communities are treated fairly in all of. So Senator Russ, why don't we start with you on that?
And I'll be a whole lot briefer with this. Well, the $500 is property tax rebate is extremely progressive. And the reason for that, of course, is that those of in general, of modest and middle incomes tend not to live in a couple of $1 million homes, and so their property taxes and the value of their homes is lower, and so it is progressive. One of the difficulties I have with it is the same difficulty I have with the circuit breaker and the renter's credit, and that is it is decoupled from the payment of the taxes. What the governor is proposing is to put the property tax rebate as a reduction on the income tax return and reduce your income tax liability with it. I think a lot of people will not connect it with a reduction in their property taxes, and so I would hope that the dollars that we put into, and I certainly support that, into property tax relief, because property taxes have an overburden in terms of support for local and state services, that we can have it more in line with the actual payment of property taxes.
House File 2 in the House is a $92 million package of property tax relief directly to homeowners, but also includes renters. The governor's proposal only goes to homeowners, and as we know, renters are the ones who do pay the property taxes on their apartments. The landlord wisely just passes that expense along as part of their business expense when they determine the rent to be paid. We took a little different approach there before the governor's budget came out in terms of making it, using the existing property tax refund system as the backbone and the existing renter's credit as the backbone. The $500 per person approach is appealing in its simplicity. If you're alive and you own a house, you get $500. It does bias towards greater Minnesota in terms of percentage of property taxes paid. We here in the Metro pay more in terms of property taxes, both in raw number as well as percentage of income in general than greater Minnesota does. That will be tempting to some of my greater Minnesota colleagues. And we can have very good theoretical and philosophical conversations here this morning. My job with Representative Lincheski is to put together a bill on property taxes and other taxes that gets 68 votes in the Senate, while Senator Rest and Senator Skoye are working on a bill that gets 34 votes in the... 35. We need 35. She wants a margin. Well, then I want 69 votes in the Senate. So things like that where I can argue as a Metro guy, this goes a little too heavily for greater Minnesota, maybe we should look at changing it some. That will be exactly what's appealing to my greater Minnesota colleagues.
Fourth tier income tax. So we've heard from some legislators that is going to be a significant issue to their constituents. Where do the caucuses, where do folks stand on that? I mean, some are just kind of throwing the towel. We're going to have a fourth tier, just don't make it too painful. Do you agree with that? Is that just a done deal? And then two, the impact of that, that flows through for small businesses. So Senator Russ, let's go back to you on that.
The governor ran on and was, I think we can assume, was elected on imposing a fourth tier in the income tax system. And I don't know where that fourth tier rate will be, or whether it will stay at $250,000 for married joint filers. But my response to that is yes, count on it. There will be changes in the income tax system, and at the end of the day, there will be a fourth tier.
Do you agree with that, Representative Dabney?
Let me just add this. 2 years ago, in that odd period between the end of the legislative session and before the shutdown and the budget resolution, I met with members of the downtown business community. And I think a number of the people in the room were from BOMA, the business, the building owners and managers. So they own or run big buildings in downtown Minneapolis, but their clients are primarily small businesses who fill those buildings. And in that gray period between the end of the session and the resolution, they were expecting that that the governor would prevail and we would end up with some form of new revenue and an honest resolution to the budget. Isn't what happened, but that was the assumption for the conversation at the time. What was striking to me was they looked at us in the eyes, the legislators in the room, and said, raise the income tax. Don't raise the property taxes. Because as a small business person, I only pay income tax when I'm successful. If you raise the property taxes, I pay it whether I'm successful or not, and that's what's going to push me out of business, not the income tax. And that was a powerful moment for me, for their insight.
Thank you. So I'm going to jump around to a couple more questions. I think we are going to have time because we have so many people here. Taxes to the business community is so huge. We do want to have an opportunity for some folks to ask questions. So I'm just going to hit on a couple of more things. Obviously, TwinWest has taken a very active role around transportation and the needs for transportation. A couple of years ago, even took a very controversial position to support. That one still stings a little from some of our members, but it was something that we thought was really important to have that dedicated funding for transportation. So the governor's proposal does have a quarter-cent sales tax increase to the metro area to fund transit capital and operational investments as well. So just how is that being received? That's specific for, the metro area. How is that being perceived in the caucus? Is that something that you think will ultimately be included in the proposals that come from the legislature? Representative Dabney?
I'll grab this one first. I was on a conference call with Representative Hornstein, who chairs the Transportation Policy Committee in the House, Finance Committee, pardon me. I was looking to Representative Carlson for a little correction there. And what I'm hearing from activists and transit people in my district is not quarter-cent, three-quarter-cent sales tax dedicated to transit. And the conference call, we were going through kind of what our legislative agendas were going to be from different perspectives, and he said, well, and I'm interested in this proposal for a three-quarter-cent metro area sales tax dedicated to transit. And they said, okay, Representative Dabney, what's your legislative agenda this year? And I said, well, it appears to be defeating Representative Hornstein's legislative agenda. So there will be, we're all in the family, but, do you ever know, have you ever been in a family that didn't fight?
Was that rhetorical?
Yeah, that's very funny. I think I might be in the same position in the Senate with Senator Dibble. It's another hard choice that the governor makes here to add another quarter-cent, and this now would be the 7-county metropolitan area, not just the 5-county area that pays it now. And I think we have to look at what his goals are for that, and he wants to get rid of the operating structural deficits. He does want to use it to fully fund the investment in Southwest, in the eastern part of my district. I'm very interested in the Bottineau corridor and moving forward on that. So it would be an LRT line running from Minneapolis up to Brooklyn Park. And really making good on the notion that we have a multimodal transit system in our area. Not everybody either should or can be served by a light rail line. So we have to look at smart uses of our bus routes, and what the governor's proposal would do would also to cover purchasing and operating of more buses. Other cities, other metropolitan areas make a huge investment in public transportation through a metropolitan-wide sales tax. So this is not, this is particularly a copycat kind of proposal, looking at the successes that have been had in other metropolitan areas that fund their transit operations through a metropolitan-wide imposed tax. But that being said, just because we, once again, just like with education, we applaud the goals and the results that the governor is looking for, we have to be very, very cautious about putting on a new tax, even a quarter cent. And so in the tax committee, we will be giving that proposal just as much scrutiny as some of the other increase in taxes that the governor is imposing, even if we have our favorite result in mind. So we're going to be cautious, but certainly extremely cautious about anything more than a quarter cent.
Okay, so before we go, what to the audience here, one, and let's kind of do this as a quick question, but maybe hoping for a little bit of insider information here, just for TwinWest. We won't tell anyone, but can you turn that off for a second, Michelle? Yes. What might we see from the legislature that we didn't see from the governor's proposal? So what you're talking about in your caucuses, anything that, might be somewhat surprising, something that your caucuses are saying, we're not going to go there with the governor, or something that you're saying, the governor doesn't want to go there, but we want to pursue this. So just, I don't have to go into a lot of depth, but is there anything that's kind of...
Well, just briefly and on a single issue.
Okay.
Yesterday in the Senate Tax Committee, we took up the healthcare exchange bill, and we feel that it should not be the funding mechanism, and that's our purview, not all the other policy stuff, but the funding mechanism. We feel that it should not be a tax, or if whatever you want to call
User
that
fee.
3.5% withholding. Most of us would look at that as a tax. And so what we did was use equivalent amount of dollars that it would raise from the health impact fee. So at this point, it's general fund dollars. The tax committee's charge will be at some point to fill that, quote, hole, we would say, in the general fund. But we are very strongly encouraged that the step we're taking there is the right one, and that is not one that's coming from the governor or from and you've served on some of them, the advisory committees, but we think that's the right way to go.
So, and maybe just to put context on that, and the business community did support and testify in support of that amendment. What it did was for the shop exchanges, which is where small and businesses could go purchase health insurance, there was going to be a 3.5% charge, if you will, user fee, call it what you will. And the vote was to use, I believe it was the health impact fee, which is the cigarette tax, rather than having small employers have to fund impact fees, sorry. So anyway, that was something that the business community supported, and we did appreciate that change. So that's great. Any inside secrets from you?
Well, I don't know that it's an inside secret, but shifting over from taxes to what we get with the taxes, there's been a reference or two already this morning to early childhood as a place of focus this year. I think lots of lip service, not a lot of delivery the last number of years. And the business community has been a serious part of the argument to look more closely at the benefits we can get from investments in early childhood. There's some real problems with the scholarship proposal as currently proposed for early childhood, and the clearest example I would give is it simply doesn't work for school-based early childhood programs, for 4-year-old kindergarten programs. Minneapolis has 500 kids on its waiting list for its 4-year-old kindergarten program. St. Paul has 700. That's 1,200 kids in the state, amongst the neediest kids in the state. So therefore, from the research, the kids where you're going to see the greatest return on your early childhood investment, and the scholarship program as presented doesn't work for them at all. Currently, St. Paul has 9 kids in their 4-year-old kindergarten program using the scholarships. It simply doesn't make sense to say we're doing great things for early childhood and leave 1,200 of the poorest kids in the state off of the table on that. So there'll have to be, for that to move forward, I think there'll have to be some significant reviews about, okay, great idea, doesn't work. What do we do to make it work for the very kids we get the greatest return on that investment with?
Okay, thank you. Judy, we've got a question?
We have one audience question today.
Great. Thank you for the opportunity. My name is Joe Keller, and I'm the president of Motive Action. We're a marketing services company based in Plymouth. We have 100 employees, about a $7 million payroll, pay about $75,000 a year in property tax. And the services that we sell, we're a professional services company. We sell marketing and sales services to the country's largest companies. And I'm going to ask a question in 30 seconds that one of the employees asked me, and I couldn't answer it. Maybe you can, or at least I hope you're going to think about it as you're deliberating. But before I do that, I want to just make it, we think it's important to make a distinction between business to business and business to services taxes, or business to consumer taxes, for 3 main reasons. One is the size of the transaction. So, if I'm going to go get, or my friend here, Jeff, is going to go get a $25 haircut, that's one thing. But if I'm going to sell and buy a $100,000 service contract, that's a whole different ballgame. So the size of the transactions are different. The second point is the purchaser of those services is very different. When you're selling a business-to-business service, you are selling to a professional procurement person who buys for a living. And the third thing is the distinction is the interstate commerce and the competitive nature of that, okay? I'm not going to go to Hudson to buy, to get a haircut. But I will go to Hudson to buy $100,000 worth of legal fees or marketing services or advertising services. So here's my question that one of our employees asked is, if you're a purchaser of professional services and you're buying on a routine basis $100,000 contracts, $500,000 contracts, and you're sitting out in New York and you're saying, I can come to Minnesota and buy a $100,000 advertising campaign or a marketing campaign or a legal fee or engineering or architectural services, or I can go to 46 other states and buy that exact same service and not pay a tax. The question that I got from a $50,000 employee was, Joe, why would anybody come to Minnesota and buy a professional service.
Well, I think I talked about that in part of the discussion of business-to-business services, and I spoke with you about it and appreciate the information from your company. I think you make an extremely important distinction. If a company in Minnesota is the one purchasing the service, then whether they purchase it in Minnesota or outside of Minnesota, it would be subject to the sales tax because they're here in this state. Even if they purchase it from outstate, they have to pay the use tax. That's the other coin of the sales tax. The more important competitive disadvantage is when an out-of-state company will not will be disinclined to purchase a service from a Minnesota company. And that, I think, is where you're absolutely right. That's where the rub comes when we're looking at these business-to-business sales taxes. We know that, or what I find extremely interesting, and I absolutely I don't understand it, is across the country, tax reform, however that's going on, is moving almost exclusively to the sales tax, and it's being done by Republican governors. John Kasich in Ohio, he's getting a lot of heat about it, but he's trying to get rid of the corporate tax and the income tax and put it all on sales tax. Bobby Jindal in Louisiana, the same way. Just recently, the governor of Nebraska, there was a editorial in the Wall Street Journal about all of these governors that are moving toward sales taxes and including on businesses. And I don't understand that as a proponent of a progressive tax system, equalized between the various internal systems, but overall that we would have a progressive system. And the sales tax system doesn't really achieve that. So I would, I would advise you to be looking at what's happening in other states with regard to what they think is tax reform. And it is an increasing reliance on the sales tax. But the point you make is well taken.
Just less than a minute here, Jim.
I'll just add, fair question, good answer. I would just expand Senator Rest's answer a little bit. It's over the last number of years that we've seen a growing reliance on sales taxes, including a growing acceptance by consumers. Think of the legacy amendment here. In the metro area in particular, it passed fairly well. People are willing to raise their own sales taxes. It doesn't always make sense from a progressive revenue point of view, but they're willing to do it.
So I want to thank both of you for being here today. Obviously, this is an incredibly important issue to us. I know both of you have very open door policies, so I would suggest that our voice needs to be heard. We need to continue to have these conversations. Thank you very much. Thank you very much for being with us this morning. I also, just quickly here to wrap up, the TwinWest 28th Annual Gala is just around the corner on Friday, March 1st, here at the DoubleTree. Tickets are $85 each. If you purchase 10 tickets, you will receive 2 free. Great little gift for the folks at the office. It's a fabulous time. So call TwinWest, go online, or see a staff member for more details. And you don't want to miss out on the March 8th legislative breakfast. We are very honored to have Governor Mark Dayton is going to join us as our keynote. So that will fill up fast, so be sure to sign up for that. And again, I just want to thank our series sponsor, Grand Casino Mille Lacs and Hinckley, for all of your support, and all of our sponsors today. We really appreciate it. So have a great Friday and a better weekend.